Okay, hello traders and welcome to our live trading session. Today is Stu Napan here, founder of Master the Markets, Illustrious Conference and the Traders Open Day. So today we're going to be looking live at the screens and today's topic is going to be on the 4-bar patterns. Okay, that's what we're going to be looking at. Let me just share my screen at this moment. Okay, so there we are here. And over here, what we are looking at is the intraday time frames. And we are going to be looking at 3 different time frames, okay? And before I look at them in much more detail, what I'm also going to be doing is basically going to first teach you about the 4-bar patterns. And then after that, what we're then going to do is then correlate it across the different time frames and see how we as professional traders can look at trading opportunities in the market. So you see, the first time when we first learned this from our mentor, who now trades for Morgan Stanley's as his own hedge fund and all, they told us to look at the markets in a different way. The first thing he told us was, if you have an OHLC bar like this is usually what we learn as an open, high, low, and close. And of course, for those of you, who are just really beginners, you can always access the Trader Starter Pack. I mean, the links and all that will be there on our pages. You can do that. Or like intermediates, you can look at the Trade Like a Master video series, okay? Or for some of you looking more into live trading, you can look at the live trading video series, which will be underneath this video as well. But now coming back into here, is what I'm saying is in an OHLC bar, where you got the open, the close, the high, and the low, he first then told us, you know what, strip out the close and the open, and all you're left with is a high and a low of a bar. And then he then said, if you, let's say, have 2 vertical bars like that, draw out all the different permutations that you can have. Draw out all the different permutations like 7, 10, whatever. How many permutations do you think you can form without having bars with equal highs and lows between these 2 bars? No equal highs and lows. Without that, how many different permutations can you do? Have a think, traders. I mean, yourself. Stop to think for a little bit. Take out a piece of pen and paper and go ahead to draw. That's what we did. Okay. And we usually do the simple exercise on Traders Basecamp package as well. And I must say the first time when we did this, my mind went blank as well because I'm not used to looking at the markets like that, right? So I wasn't very, very sure about what the different permutations were. I was drawing all kinds of different diagrams. But you see, finally, it comes down to 4-bar patterns that will continuously reoccur on any instrument that you look at. Let it be currencies, commodities, indexes, it doesn't matter. There will only be 4-bar patterns that's happening all the time. And even if you change time frames, there will always be these 4-bar patterns. And based on this, you can develop some really strong strategies going forward as well. So let's take a look at them. All right. So one of the bar patterns that can happen from 2 vertical bars, just highs and lows, is 2 bars going higher. Okay. Basically in reference, that means basically this bar. Let's say this is the reference bar. The first bar is the reference bar. This bar makes a higher high in reference to this bar and also makes a higher low in reference to this bar as well. That's the first type of pattern you can get. The second type of pattern that you can get, as you would have guessed, the opposite of that, isn't it? So usually you are looking at something like this, okay? Like that, lower lows and lower highs, okay? Lower highs in reference to that. So this is a reference bar. So that will be a lower high. And this one will be a lower low in reference to this bar. So even in this simple chart on the GBP USD, you can see that, right? So you can see that over here, there's a higher high and a higher low, isn't it? Between 2 bars. Always keep on taking 2 bars and comparing higher highs and higher lows. Over here as well, higher highs and higher lows. But when it starts to change, then you can start to see there is lower lows and lower highs, okay? And even when you go in an upward fashion, in a bottom to top move, as we call, it's not, don't confuse it with uptrend, because uptrend requires looking at cycles. But in a bottom to top move, in comparison between bars, you can even see, even in the up direction, you still get some lower lows and lower highs. This pattern here, bar pattern 2. Okay, so these are the 2 patterns so far. Let's go on to the third pattern. The third pattern is what we call the insider bar. The insider bar. Okay, this bar is within this bar. Right, that's the IB. And even within this over here, you can see there is an insider bar here, is it not, traders? Yeah, insider bar here as well. And finally, the last one is what we call in this diagram here. So if you have a small bar like that, the next bar is bigger than that in terms of a higher high and a lower low. So this is what we call an outsider bar. Okay, and you can see outsider bar here. Can you see that? That's an outsider bar over there. All right. Okay, good. So these are the 4 bar patterns. All right. The first one is a trending bars to the upside, then trending bars to the downside, second bar pattern. Third bar pattern is an insider bar. And the last one is what we call an outsider bar. Okay. So as you can see over here, what we have today, we have, first of all, what direction do you have? Do you have a bottom to top move? Okay. And we can easily quantify that because of the smart money indicator that we have, because we are using quantified way to look at the market. The algos kicks in and tells you that's a top. So it's a bottom to top move. And in that bottom to top move, I am having a 2 trending bars to the upside. Okay. So all you have to see now is tomorrow, is it going to continue up and confirm the bottom, or is it going to continue in its original direction of bottom to top and going to go further down? Okay, that's the things that everyone will be looking out for. Okay, so how do we now correlate all of this? So as of yesterday, what you will see, and as of today as well, we had this bar, right? So then you can ask yourself, what are the 4 bar patterns tomorrow that is going to happen, isn't it? Now, as you can see, if you remember the 4 bar patterns, if it once it takes out the high, it can no longer form bar pattern number 3. Today can no longer be a insider bar. It cannot be. However, it can still become a outsider bar. But the probability of outsider bar for the day decreases as time progresses as well. Okay. As of now, you can also see that if you just take a look at the daily, you can see that at the moment, what bar range has it done? This was done by one of our elite traders as well, who now elite clients. He programmed this for us as well. Very useful tool. Tells you the bar range for today. That's 85 pips, isn't it? And I know the ATR is 97 pips, and on average, it should form 97. So I know that for this to become an outsider bar now, it's got to go back all the way down. It's got to form at least 154 pip bar. I know also bar pattern number 4 is very low probability. So you see, traders, the only way now for this to form is really towards continuing more to the upside. If you were to take out that its own high and create more, little bit more left to the upside to create its total full bar range, which will correlate with the ATR. Okay, as intraday traders, remember I told you that you just go for actually 0.8%, 0.8, 80% of the ATR, isn't it? So if you had done that, then basically, I mean, you would have got your profit for today on the shorter time frames. So that's how I would look at in terms of putting the 4 bar patterns forward. If you look on the 1 hour, then you can see that, let me just go to today, that as then it gives you a signal to go on the upside. If you think that bar pattern 2 is going to form today on the daily, which is take out the high and go further up, which it already did over here, and then you put your targets in place to come out at that particular profit level. You see, let me show you how that is done, and then we can take a look, and then you can keep practicing it as you go forward as well. So for example, if you take a look here, that was 97, wasn't it? 0.8 times 97 is, let's say, just 80 pips, right? So 80 pips, if I take a look, once it took out that high, 80 pips, did it do is 80 pips over here? No, it just did 70 pips and then it started to reverse. That's why you have your trailing stop loss mechanisms to reduce your loss. And then after that, then it came back further down again. Now it's going up to the upside again. Let me just quickly just take a look at this. Is it 71? And then over here, perhaps I think okay, so it has done 85. So it's just that the low here is not correlating on that 13918. So let's take a look over here. 13918. So it did its low much later. So from here to here, then it becomes 85. Yes, in this so far, it was not pretty straightforward in making its 80% range, but it will come out with a small loss over here. Okay, not would have been able to capitalize. That's on GBPUSD. Let's apply this on dollar Swiss. Let's do it on two more. Then you can get an idea of what's happening. You can see over here today, it neither has taken out the high or neither has taken out the low. It's currently now an insider bar. You see, then again, you ask yourself, is it going to be bar pattern 2 today? For bar pattern 4 to happen outside a bar, very, very rare, isn't it? Very low probability. A bar pattern 2, can it remain inside the bar? Yes. Can it become a bar pattern 3 where it takes out the low? Probably no. So you're only left to bar pattern 1 and bar pattern 2. So the only thing that can happen from now to the end of play, it can go up and take out the high of this bar. That's what we should be looking at. So if I go on to the 1 hour, take a look at that. You can see how I'm time frame correlating at the moment. And I can easily see that, you see, for example, as this goes further down and down, but one critical level that you can take a look if you're looking to take a position is, if it does take out that high, then you can see too, if it carries on a momentum to take out the previous day's high to create bar pattern 1. So you can take a small amount of profit over there. Bar range is 48, ATR is 59. It has done almost its range, 80% range. But if it does show some momentum on the 1 hour, then I will play it to go for that small bit of profit over there. Okay, 18 and 5 or 10 you can go for, but you got to monitor it closely. But everything I'm telling you is how you would play it and look at different entry points to increase your reward to risk ratio. Okay. One last one we'll do together, euro dollar, top to bottom over here. And you can see that today it's done bar pattern 1, isn't it? It's gone up further, but this is a top to bottom move. Okay. So tomorrow, we can be looking at, let's say if it continues in the same direction, the first thing it needs to do is bar pattern 2, isn't it? Take out the low to carry on in its further direction once more again. Okay, that's what we will be looking at. But as of today, as it completed its range, let me quickly take a look. 70, 80 or 66, yes, more or less, more than done its range for today. So I'll leave it as it is. If I were to just take a look at the euro dollar on the 1 hour time frame, just to get an idea of what's happening there. You can see that it's taken out the stretch line to the upside, stretch line to the bottom, probably low weakness to come and take out the high back once again. Okay, so that's what we have in terms of this. So this is a bar pattern 1 that we had today. Just that this one here, the second bar on the daily, was just a red bar as of now because of the close. Okay, so do have a reflection on this, on all the different currency pairs or different instruments. It doesn't matter what instrument you look at, it's all the same concepts and principles, and see how the 4 bar patterns work and how you'll be taking it and what critical level you'll be coming in to formulate in your strategy with an edge. Remember one thing, traders, is that one thing I always learned is every time that my mentor used to teach me something, most important thing is after that time, after you learn that concept, is for you to go and practice it by yourself and quiz yourself. That's the only way that knowledge is going to get integrated within you and it's going to become you, and you can then trade with far more conviction and far more confidence. Okay, so I leave that as homework for you all. Go and reflect on the 4-bar patterns and go and draw them out on a piece of paper. Quiz yourself what's going to happen tomorrow. What's the probability for bar pattern 1, 2, and see then how you can formulate a strategy with an edge that can continuously give you the consistent returns. All right, so that's all from me for this video. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.